All right, guys, we've got another Sunday video for you. This time it is Mother's Day, so happy Mother's Day to all the moms out there. I hope you had a fantastic weekend, and if nothing else, you've got a ton of volatility coming for the week ahead. Market sell-off continues. Just when you think the bottom is in, the next day it goes even lower. It's not a time to try to be a hero. It's not a time to try to figure it out. It's not a time to call the bottom or call the top. It is a time to be a trader, just like we've been talking about. That's what's working, and it's working extremely well. Things have been very volatile, obviously. If you're trying to force a trade, if you're trying to overstay, there's a good chance that you've been either losing or underperforming. Right now, it's about getting on the right side, scaling into that trade, and when it either slows, meaning at the pace that it was rebounding, it kind of starts to fail a little bit and maybe start to go sideways, that I like to risk down. Or if it starts to open up, and it starts to ramp if I'm on the long side, or if I'm on the short side and I start in and I start to scale in, the bottom drops out. It's not a time to be patient and, maybe it could go lower. I might as well let this winner work. It's a time to use that liquidity, use that pocket that just opened up, and take advantage of locking, if not all, at least some, if not most of, whatever that trade was. And then if you're on the short side, it stays heavy, then there's possibility to rescale in. Or if you're on the long side and it starts to grind higher, there's a possibility to also rescale in. But when you have those big pockets that open up, the at least edge to me is by going ahead and capturing that move. It's a trader's market. Things are, going one way in one direction and then just completely doing a 180. And then when you think it's about to break down, it's doing a 180 going back the other way. So there's no time, there's no edge in trying to time the bottom, it's not the time to reposition on a long and try to call the bottom and all that kind of stuff. Right now, it's just be a trader, and that's what's working. Swings have been fantastic despite the market volatility, at least the last couple. SOUN, BTTX, those were both fantastic. SOUN was an 80% move. BTTX was a doubler. Plus, we've had the Juneteenth sector theme index that I went over that I've been quietly accumulating, and it started to really take off this week. So those ones, so far so good. It's nothing that I'm chasing. It's something that I had been accumulating for a while. But this started to have some competition on the bids, and obviously the offers were a little light given the recent uptick. But so far so good on that swing idea. Other things that have been working. The pre-market prep's the same. We've been talking about, typically we have one or two of those big gainers pre-market to take advantage of. Same deal. That's what I've been doing every single day. Usually we have one or two. For example, on Friday we had BBIG, and then we had SIDU. Those are the two small cap momentum trades of the day. And then what you do is you take what you were prepared for from the night before on scans or pre-market scans, whatever you do as a trader, and whether your price alerts are hitting, whether you've got them up on your screen and the trade starts to set up, that's, at the point where those things hit, that's when I'm focused on those. And so, for example, we had CHGG and TDOC. Those were both fantastic unwinds. They were rebounding, and then on the third day, it finally peaked out and faded off. I tried them the first 2 days, but I did not scale into the trade. I just put on a little bit just in case it started to fail. And as you guys saw, the difference between those first days and then the third day, when I actually scaled, you can see the difference. And, getting shown that I'm right, and then scaling until there's a reason to either lock in because it flushed out or it started to slow down, and therefore I wanted to cover some with the ability to rescale back in, resize back in. So you saw that as well on the CHGG trade. A couple things to talk about. BCRF. We talked about the big Boston Hot Pink party that we had about 2 weeks ago. And we got a pretty big award there for Traders for a Cause. And so I've included my speech in the blog post as well. We'll also put it in the description. So I would encourage you to check that out. I spent a lot of time on it, and I feel like it's a good message, and hopefully it inspires you to give as well. But the more important, or the better news is we're going to premiere that podcast that we did with Lance and Greg, myself, and Zach in Boston on Thursday. So stay tuned for that. Make sure that you're following the Traders for a Cause YouTube channel. We'll set up a reminder for you guys to be able to check it out. But I think you're gonna love it, and I'm hoping that it inspires you to give, just like I said, and I'm hoping that you guys enjoy it so much that you're ready for some more, because we're gonna start to do a bunch of these. That's kind of where we're heading with this thing, and hopefully create some awareness for different charitable causes along the way, raise some good money along the way, and in return, you guys get a ton of great content from fantastic traders. So I'm really amped up about it. I'm excited to see where this goes, and I'm really curious about your feedback once you guys check it out later in the week. So I think that's about it. I mean, the adaptability, I tweeted this week, is the current edge in this market. And if you bring too heavy of a bias, you're either underperforming or you're losing. So keep that in mind. If you're having trouble, if you're getting chopped up in this action, it's really a trader's paradise right now, and you need to treat it as one. If you are getting chopped up, take a step back and think about how you could have traded something better, because right now is a great time to start building your accounts and just compounding over and over again. And it's fine if this is not for you, if it's not working in this current market. It's okay to also take a step back. It's nothing worse than trying to force a trade, trying to, make a trade that you're not comfortable with or confident with, and then having it go backwards. So think about that. No trade's better than a reckless trade. And then also at the same time, don't force a bias. Don't try to force yourself to be right now, because there's a lot going on. And there's a lot of opportunities, and if you waste time being wrong, you're gonna miss 2, 3, 5, 10 other opportunities that fly by you. So let's get right into scan for Monday. All right, so as always, I'm not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're good with that, the goal here is to show you how I prepare, how I get ready for the week ahead, and what makes me sort of interested in particular setups. And then as they do set up, as they do come into my wheelhouse, that's when I'm prepared and when I will actually trade them. I'm not looking to force trades. I'm not looking to find a trade. I'm looking to wait for these trades to come to me. And I think that's really the most important part of trading. I feel like a lot of newer traders just try to find all these different trades. They feel like they need to trade. And one of the things on the podcast that we have coming that Greg had said is, you don't need to trade to be a trader. You need to be profitable, right? And I do see, some of the newer traders, they just feel like they always need to be in a trade. They need to have something going on, when some of the best usually have nothing going on. Now think about that. So let's get right into it. S triple Q. It's been a fantastic profit center. This is exactly what I'm talking about when you get on the right side, scale, bottom drops out, I'm covering. I don't need to be a hero. I don't need to get the dead bottom. Many times it ends up being the dead bottom, and that's a perfect example of, you're waiting out, holding for more, and then it ends up reversing and doing the 180. So be careful of that. This one's been fantastic. Sometimes, you could trade T triple Q, you could trade the Qs, you could trade AMD and Apple or any of the names that are in it. But for me, typically, I like the liquidity on this. I'm good at trading it. And sometimes occasionally I'll flip over to trading the T triple Q on the short side as well. I don't mind going long them either. They're opposites. But you have to trade where you see the setup, where you're comfortable. And just for me, my sizing on the short side is 10x what it is on the long side. I'm just more comfortable. So that's why I personally choose to short SQQQ instead of going long on the opposite, T triple Q. So just think about that. What would you be best at? What fits your personality? And that's really the answers, because sometimes people ask me why I don't go long one and I short the other. But just figure out what works for you. And maybe it's the Qs. Maybe it's options on the Qs. Maybe it's an Apple. Maybe it's AMD. Whatever it may be, just make sure that it fits with your own personality, not somebody else's. ICPT. This one is losing a lot of volume and range. Obviously, it had a great trade on Thursday, consolidated on Friday, but a lot of people take it off radar at this point. I want to keep it on radar. I want to set price alerts. I want to know when it breaks out of, potentially this 20 area, or when it breaks under basically this either 1890s or 1870 level. And the reason for that is I don't want to get chopped up in between, but once it breaks down, it's either going to be a $2 or $3 pullback, or if it breaks out, it's probably going to be a $2 or $3 breakout. And so we just kind of saw that on NXTX, which I'm sure a lot of people already lost off radar, right? So we had that huge move, then it just kind of consolidated. It was pretty much going sideways for a couple days, and it's off your radar. Now you look at it and look at the move you missed, right? So that's why we set price alerts. That's why ICPT, it looks like nothing. But there's going to be a trade coming, and I don't want to lose it off radar, because when it does pick that trend, it's going to be that $2 or $3 move, and I want to be part of that. So keep an eye on that one. LYFT I have as main radar as well. Like the volume. I like the opportunity here. It's been a great trader. I've been trading it the last couple days off the open, joining the trend, and covering the flush and then leaving it alone. Right now, you can kind of see that it's starting to form a base in this 2020, 2030 area. I would say really 2030s. And you can see that it's sort of got a peak at the 2070s. So what I'd be looking for personally is either a morning shove, 2070s, exhaust out, starts to fail. I'd fade that. Or if we start to base at 2030s and we finally get a rebound, market permitting, if the market rebounds, then we have an opportunity here to get a rebound like TDOC and CHGG. So for example, you can see CHGG had a very similar kind of gap down and rebound, but Lyft has not done that yet. Lyft is just gap down. So I'm looking for the potential bounce, but I'm not bullish. I'm not bearish. I want to be joining the trend based on those two levels that I gave you. And the same thing happened with TDOC, where gap down and then it had the rally. I kept it on radar. And then we had back-to-back days of $3 to $4 pullbacks. That's a huge move. And even with a small account, you get on the right side, that's a big P&L for just joining the trend. $4, $7 per share between the 2 days. So I'll be watching that for any of those levels to hit. So keep that in mind. And those are the only main watches that I have. I'm not too excited about anything just because that's not the market we're in. I don't know if we're going to gap up 500 points or gap down 500 points. So all of that could be completely off the table. But what I do know is I want to stay familiar with these because I've been trading them well. They've given good opportunities. Saidu, failed follow-through section. So this one, I got short on Friday. I got short into the first little move over here, started into the position. As always, if I do trade on the front side, I don't go more than 10 or 20% of my position. And the reason for that is because I want to be able to go for a ride. I'm getting in there so that I start to zone in and focus on the trade. It's not because I'm trying to find the top. It's because I'm trying to get a good feel, get a vibe of what's going on in the trade. And the only way that I personally do that at times is by actually getting in the trade itself. And so you start to zone in, get a better read on it. And I waited for the big exchange. We had a nice exchange right over here where it flushed down, and I had added some more. We had another retest of that, and then it confirmed, and then I went full size on the crack because we had not one, not two, but three failed follow through post exhaustion candles, which was fantastic, which was enough for me to want to go full size on what I had borrowed versus the highs. I like the risk versus reward, and I let it go until the bell. So it did gap down a little bit more after hours. I'm hopeful that they kind of walk it up a little bit, but I would be looking to join any good pops. Ideally, it pushes up towards 290s, threes, and then starts to fade back off. There was no real reason for it to do what it did. It's just there's nothing else going right now. And so anytime something starts to pop up, everybody's like, all right, I got to go, 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 go. They chase everything, and then, here we are, we're at the lows. SKYH, this one should be fantastic. This one reminds me a lot of everything that we talked about last week. NUTX, that was a failed follow through setup. Perfect trades, perfect opportunities, retested back towards the 10s, and now we're back into actually went under 6. Nice, quiet $4 per share type of trade. VERU, anybody that's been watching knows, been looking for all pops back to the singles. Not only did we get singles, we're already down into the 8s. I mean, really nice opportunities. All pops sold into. Same deal, same thought process. SKYH was also the same deal, same thought process. And then we got a nice little rebound. So back on the chopping block. Higher the better. Look for it to exhaust out. Failed follow through. All of these names you guys should be familiar with. We talked about all of them last week, including ATER. Same concept, same thing. But most people take them off radar. CYN, same deal, same thing. Everybody is afraid to miss all this, all the action going to the upside. But once it cracks and they're frustrated because they exhausted out on the front side and they don't have a piece, they take it off radar. Sometimes the best moves are still to come. And as you've seen, those were all the stocks that we talked about last week. NUTX, ATER, CYN, SKYH, and probably for the week ahead, RDBX, and again, SKYH. So keep that in mind. FRGE has been fantastic. And this is another example of scaling into your winners. I traded it 4 times last week. Tuesday, Wednesday, Thursday, Friday. Tuesday, I started in, I covered, I lost. Wednesday, I started in, I covered, I lost. Thursday, I started in, it failed to follow through, I scaled in, I added, and it fell $10 per share. Crushed it. Friday, I started in with a starter, it held trend, I stopped out, I moved on. I traded it 4 days in a row, and I did not scale into a loser. That's the idea here. It's fine to start into something, but when you're right and when the trend convinces you or shows you the hand, that's when you want to scale into that opportunity and take advantage of it. You can lose on the starter as many times as you want. As long as you're not adding, you're not going to get blown out. The key is to scale into a winner, not a loser. VERU, we already went over it. Same deal. Higher the better. I'm not looking to just short it every single morning. I'm looking for opportunities. I'm looking for pops throughout the day that kind of ramp up, sit back, ramp up, failed follow through. Same deal every time. SGLY was Hindenburg. target, and I mean, market agrees, and I wouldn't be surprised to see this continue to go. There's no liquidity anymore. After this, fail, that was kind of, to me, it looked like, kind of a dead duck. So when he came out on it, even though it had gapped down, I still participated. I should have held a little bit longer, but I am looking to get back in there for continued fade. I do think that we could end up seeing this fade off radar more than people actually think. Continuation side of things. SNOA should look familiar. Liquidity trap setup. I participated in this early on Friday and then on some dips. It had one little squeeze out. These things you want to be aware of and cautious of, because remember, liquidity traps, what's your edge? Your edge is either the parabolic move or be cautious of a stuff move, because the liquidity trap is anticipating that squeeze, right? You've got all this big volume on the daily, right? So you've got 60 million shares. Then the next day it goes down to 2 million, goes down to 700,000, right? And then the next day it pops up on 1 million. So there's been no ability, if people swung this short, to actually cover. So that's the point here. So if it continues to hold trend, I will continue to add. But if it hits resistance and it fails to follow through, you need to be aware of that. You can't overstay on these things, because it'll just fade back to where it came from. If you guys need an example of that, MDVL. You saw exactly how this traded out. It was a perfect liquidity trap. Rips, comes in, rips again, squeezes out. We talked on Sunday video about the importance of understanding that 310, 315s were the exhaustion level. And if you're anticipating a liquidity trap, when that squeeze comes, you need to be a seller. And so you can see how that started to fade back out after the cover came in. The cover came in this day, and then that was it. Failed to follow through. So remember, if you're trading a liquidity trap, make sure that you are locking in to the power. Or if it hits a brick wall when it should have broken out, that's important. That's important to take note of. And if it stays heavy, you need to, watch your risk. SOUN very easily could be in a similar situation. It did kind of crack into the close, which, they did save it, and, we'll see what happens. But it came back pretty impressively. I am still long. I sold a bunch. You saw my sells into the 17s on that swing trade, but I still do have some from the 1080s, 11s, and 12 range. So I told myself I was going to let that work in my IRA and in E-Trade until it didn't work. So far so good. If it fails, it fails. I'm going to move on. But I took off all the other day trades when I had mentioned. So other than that, you guys know I've been participating in all these UONE, CARV, and then COHN gave a good opportunity the other day on the pullback. CARV, I've been there for probably 2 weeks now or so. That one's, I think, a 708 or 718 average, and then UONE, I think, somewhere in the sevens. So far so good. I try not to forget these each year, and everybody always is like, I'm going to wait for a pullback. I did that the prior year, and it never came. So I'm just keeping my low average, and if it goes up, great. If it doesn't, it was worth the shot. So anyway, that is the plan. I hope you guys have a fantastic rest of the weekend, and we'll catch you on Monday.